In this video, we will discuss the ex-dividend date and how it can impact the stock price of a company. We will explain what the ex-dividend date is and why it is important for investors to understand. We will also discuss the concept of the dividend payment and how it can affect the stock price. Furthermore, we will explore the various factors that can influence the stock price movement on the ex-dividend date, such as market conditions, investor sentiment, and trading volume. By the end of this video, viewers will have a clear understanding of the ex-dividend date and how it can impact the stock price, as well as the various factors that can influence the price movement. What is the difference between the record date and the ex-dividend date in relation to dividend payments? The record date and the ex-dividend date are both important dates in relation to the payment of dividends to shareholders. The record date is the date on which a company determines which shareholders are entitled to receive a dividend payment. This means that any shareholders who are on the company's books as of the record date will receive the upcoming dividend payment. Once the record date has been established, the company will create a list of all shareholders who are eligible for the dividend payment, known as the record of ownership. The ex-dividend date, on the other hand, is the first day on which the stock trades without the right to receive the upcoming dividend payment. This means that if an investor purchases shares of a company on or after the ex-dividend date, they will not be entitled to receive the upcoming dividend payment. As a result, the stock price may adjust downward to reflect the reduction in value caused by the dividend payment being paid out to eligible shareholders. In summary, the record date is the date on which the company determines which shareholders are entitled to receive the dividend payment, while the ex-dividend date is the date on which the stock starts trading without the right to receive the upcoming dividend payment. Why is it important for investors to pay attention to the ex-dividend date when making investment decisions in the stock market? It is important for investors to understand the ex-dividend date because it impacts their eligibility to receive dividend payments and can also affect the price of the stock. If an investor buys a stock on or after the ex-dividend date, they will not be entitled to receive the upcoming dividend payment. Therefore, understanding the ex-dividend date can help investors plan their investment decisions and avoid buying a stock right before the ex-dividend date, only to miss out on the dividend payment. Moreover, the stock price of a company can often decrease by an amount roughly equal to the dividend payment on the ex-dividend date. This is because, once the stock goes ex-dividend, investors who are eligible for the dividend payment may sell their shares, which can lead to a decrease in demand for the stock and a subsequent decline in its price. What is the concept of dividend payment, and how does it impact the stock price of a company? The concept of a dividend payment is a distribution of a portion of a company's profits to its shareholders. It is usually paid out in cash, but can also be paid out as additional shares of stock or other forms of payment. Dividends can provide a steady income stream to investors and are often seen as a sign of financial strength and stability of the company. However, the payment of dividends can also have an impact on the stock price of a company. When a company declares a dividend payment, it signals to the market that the company has excess cash on hand and is financially healthy. This can lead to increased investor confidence and demand for the stock, which can push up the price of the stock. On the other hand, when a company cuts or eliminates its dividend payments, it can send a negative signal to the market. Investors may interpret this as a sign of financial weakness, which can lead to decreased demand for the stock and a decline in its price. Moreover, the ex-dividend date, which is the date after which new investors are not entitled to receive the upcoming dividend payment, can also have an impact on the stock price. Once a stock goes ex-dividend, investors who are eligible for the dividend payment may sell their shares, which can lead to a decrease in demand for the stock and a subsequent decline in its price. It is worth noting that while dividends can be an important factor in a company's stock price, they are not the only factor. Other factors that can influence the stock price include the company's earnings, revenue growth, industry trends, and macroeconomic conditions, among others. In summary, the payment of dividends can signal the financial health and stability of a company, which can impact the stock price. However, investors should also consider other factors beyond dividend payments when making investment decisions. What are some factors that can influence the movement of a company's stock price on the ex-dividend date? The ex-dividend date is an important event that can impact the stock price of a company. Several factors can influence the movement of the stock price on the ex-dividend date, including market conditions, investor sentiment, and trading volume. One key factor that can influence the stock price on the ex-dividend date is the broader market conditions. If the overall market is experiencing a downturn, then investors may be less likely to purchase or hold onto shares of a company that is going ex-dividend. Conversely, if the market is performing well, then investors may be more willing to purchase or hold onto shares, which could help to offset any decline in demand due to the ex-dividend date. Another factor that can impact the stock price on the ex-dividend date is investor sentiment. If investors perceive the dividend payment to be positive news, then this may lead to increased demand for the stock, which can drive up the stock price. Conversely, if investors perceive the dividend payment to be negative news, then this may lead to decreased demand for the stock, which can drive down the stock price. In addition, trading volume can also be a factor in the movement of the stock price on the ex-dividend date. If there is a high trading volume, then this can indicate increased demand for the stock, which can push up the stock price. Conversely, if there is a low trading volume, then this can indicate decreased demand, which can lead to a decline in the stock price. To gain a better understanding of the concept of ex-dividend date, it can be helpful to examine a real-life example such as IRCTC. By exploring how the ex-dividend date works and its potential impact on a stock's price using this example, we can develop a clearer picture of this important aspect of investing. Assuming the dividend payment of 3.5 Indian rupees per share is approved by IRCTC's board of directors, the company will set a record date and an ex-dividend date for the payment. In this case, the record date is February 22nd, which means that any shareholder who owns IRCTC shares on or before that date will be eligible to receive the dividend payment. The ex-dividend date, on the other hand, is February 17th. This means that any shares of IRCTC purchased on or after February 17th will not be entitled to receive the dividend payment. The stock price of IRCTC may adjust downward on the ex-dividend date to account for the dividend payment that new investors will not receive. Let's say an investor owns 1,000 shares of IRCTC on the ex-dividend date, February 17th. If the investor sells all 1,000 shares on or after that date, they will not be entitled to the dividend payment of 3.5 per share. However, if the investor sells all 1,000 shares before the ex-dividend date, the buyer of those shares will be entitled to receive the dividend payment. In conclusion, understanding the ex-dividend date is an important aspect of investing in the stock market. While it is not the only factor that can influence a stock's price, it is one that investors need to keep in mind. By knowing when a stock is going ex-dividend, investors can make informed decisions about buying or selling shares. As always, it's important to do your research and consider all the factors that can impact a stock's price before making any investment decisions.